Exciting news actually just came out from the VA about building custom homes with your VA home loan benefit. Let's dive into the details from the VA handbook that was just updated on June 5th, 2024. What's up guys, my name is McKeown and I'm a licensed real estate agent in the Dallas-Fort Worth area. But before we jump into today's video, if you guys are finding the content on this channel useful, please give me a like, subscribe, and turn on notifications to always be notified when I release another video. Now I do want to preface this before I get into VA construction loans. I've actually used a construction loan twice, and depending on whether or not this suits me next summer, I could be utilizing this for the first time myself as well. But a construction loan in general is a huge asset to really give you the opportunity to build some solid equity into a house. So regardless if you aren't a veteran and may not be technically interested in what I'm about to say, a construction loan, as I just mentioned, is a huge opportunity, mainly because you're taking on the loan yourself. Basically, you're funding the entire construction itself. So what typically happens here with any type of construction loan is you essentially are inheriting the risk, or you're taking out the loan for the entire project, and then you pay the actual construction builder basically all of the laboring costs and material costs. Now on the flip side, let's say you go buy just a regular new construction home, maybe in a subdivision. They have essentially taken on the risk themselves, taken out a massive loan, basically done out the entire community, and they have it baked into the price in terms of what you actually wind up paying on the house. Now the big difference here is you have the ability to build a pretty substantial amount of equity if you take on the risk yourself versus just buy outright from a new build construction company. But enough rambling on, let's go ahead and get started with this video. Now, starting this month, the VA now clearly supports construction to permanent loans. This means essentially you can get a construction loan with your VA benefits. Now, in the past, lenders might have told you it wasn't possible or that no one offered it, but now it's officially an option in the VA handbook. Now, one-time close, this combines the purchase of land and the construction of your home into one singular loan. You'll buy the land and start the construction in a single process. Once everything is approved, the funds are released to the seller of the land and to the builder. Now, a good example here, not necessarily a VA construction loan, but a one-time close construction loan example would be my cabin that I constructed and essentially built over a year and a half in Broken Bow, Oklahoma. Now, that particular cabin named Tipsy Bear, I'll go ahead and leave a link in the description down below if you're interested in ever staying there. It's been renting very, very well for the last 12 months, and it has been my best cash flowing investment altogether, and that was a one-time construction loan, meaning I found a particular lot that I wanted. It was about 2 acres and a corner lot. I decided to also combine that with the price that my builder had essentially designed the cabin that I wanted all into one particular loan. Now, I've gone into great detail in terms of all of the numbers when it came to that particular cabin. It roughly was about 1.1, a little under 1.1 in terms of overall cost, both for the lot and the overall build job. And then I spent about $100,000, maybe $150,000 furnishing it. And when it came to the actual appraisal done on it, it was valued at about 1.5 million. So I was in for about 1.25 or 1.1 if we exclude all of the furnishings, and it's valued at about 1.5, leaving me about $250,000 in built-in equity. But I also utilized that through a 1031 exchange, meaning I took about $300,000 in equity from a previous property and applied it to that one-time construction loan to really be sitting at a loan balance not at 1.1, but more around the $800,000 mark. So if I were to decide to sell that cabin sometime in the future, which to be honest with you is not going to be the case, I'm gonna hold that cabin long term, but even if I were to sell it right now, just based on the original loan balance that I took out, I would be getting that $300,000 down payment I took out, as well as $150,000 I put into furnishing, as well as about $250,000 in built-in equity, having gone through the construction loan process. But again, that one-time close can oftentimes save you a substantial amount of money because you're going right into the build job. Now, moving on to the two-time close. Now, this involves 2 separate loans, one for the land and construction, and another to combine them all into a VA loan once the home is built. While this gives you flexibility, it comes with extra closing costs, making it potentially more expensive. Now again, I have another example here for you guys. I actually just closed on my dream lot just a couple months ago. It's about 2 acres in the great city of Southlake, Texas. Unfortunately, I am not in a financial position to be able to start the build job right away. Just to give you some numbers, if you haven't seen any of the other videos that I've filmed on that, I've essentially bought $1 million lot, but the house is going to run me close to $3 to $3.5 million. And I'm not in a position to put the required down payment to do a one-time construction loan process. So what I essentially did was a one-time close on just the lot, and about 9 or 12 months from then, early next year or about Q2 of 2025, I'm actually going to convert that lot loan into a construction loan, which is going to be the second time I close on it. Now, after this information has recently been actually unveiled, I may be actually going this route and utilizing the VA construction loan, because that is indeed at the end of the day going to be my primary when we do finish that build. But one thing I will say is the actual title company that I closed at just with my lot said make sure to keep my closing disclosure and reach out to them when I'm actually set to close on the construction loan, because they will give me a credit for the title policy that I paid for. So a lot of the closing costs that typically would be essentially added to that second close, I'm going to be able to, assuming I use that same title company, which would be stupid not to, I'm just going to be credited that cost on the next closing. Now, when choosing a builder, they need a VA builder ID. You don't have to pick a builder who's already VA approved from the start. Sometimes a reputable builder who isn't yet VA approved can be a better choice. Now, appraisals and eligibility for a one-time close, the appraisal happens before construction starts, based on the land and the projected home value. For a two-time close, the appraisal is done actually after construction. The underwriting process follows the VA guidelines in Chapter 4 of the handbook. Now, once again, I'm going to utilize my cabin as an example. That again was the lot and the build job all into one, a one-time construction loan. They essentially deemed that my cabin was going to be worth a certain amount before they even broke ground on the lot. And they valued it roughly at about 1.23 million. And then what wound up actually happening is over the course of the construction process, I wound up upgrading a little bit here, wound up actually adding a loft to the cabin, and it actually pushed the value of the cabin from what was initially and probably more conservatively appraised at 1.23 million to close to 1.5 million at the end of construction. So I actually had my appraisal done at the beginning before construction, but I wound up actually doing a cash out refinance, which is why I had a second appraisal done once construction was completed. However, if you really are trying to push an appraisal to the utmost possible value, you probably need to lean more towards the two-time close. Now, the main reason there is because lots of things, just like my cabin, can happen over the course of the construction phase. I know me firsthand, when I build my house in Southlake, there are going to be things that happen over the course of the build job that will likely, I guess for a lack of better terms, wind up having my house be more expensive than I initially intended on it being. I mean, let's say tile, for instance, I was giving $5 a square, and I wound up actually choosing a tile that was more along maybe $10 a square, and just the overall expected construction cost may actually be more than intended. So if you're really trying to push that appraisal, I would suggest you lean more towards the two-time close. Now, another cool update is that veterans can actually be now their own contractors, which we all know as veterans, if you're watching all the way through this video, that we are absolutely screwed. No, I'm just kidding. But basically before it was deemed a conflict of interest, and that is no longer the case. Now, another thing you can do is you can use the value of your property to offset the down payment. Now, for instance, if you already own the land, its value can be part of your equity, helping you with the loan. Now, just to give you guys another example for you to have it make sense, I currently own the lot in Southlake. It's a 2-acre lot, close to $1 million, but I didn't use a 0% down. I don't even honestly think there's an option out there to put 0% down on just vacant land. So I put about 20 to 25% down, meaning I put a down payment of about $200,000 to $250,000. Now, the good part is when I roll that into my construction loan, and just to give you guys some rough numbers on the construction loan I'll be doing early next year, that requires about a $600,000 to $700,000 down payment. But that $600,000 or $700,000 isn't fully $600,000 or $700,000, because I'm moving that $200,000 to $250,000 I put down on the lot into that $600,000 to $700,000 down payment. So no longer is it $600,000 to $700,000, we're looking more along the lines of maybe $400,000 to $500,000, which again is not something I am suitable to do now. It's going to take a little bit of savings over the course of the next 6 to 9 months for me to accrue that, and then we can start the build job. And that's about it in terms of the updates officially coming this month from the VA handbook. If you guys do have any questions or need any kind of clarifications, you know how to reach me. Leave a comment in the comment section down below. Reach out to me via Instagram, shoot me an email, or even shoot me a text. Whatever way is most easiest for you, all of my information is going to be in the description below. Thanks again for watching, guys. Make sure to like and subscribe. It really does help. And stay tuned for the next video.